Hi viewers, welcome to Market Body. Let us now learn trend analysis, that is short-term trend analysis. I am just trying to explain here in this video. That short-term trend analysis, last video I explained medium-term trend analysis. Trend analysis works on two types of trend analysis. One is medium-term trend analysis, another is short-term trend analysis. Normally for trading any indices like Nifty, BANKNIFTY, or any indices, what you feel like studying, even if you want to trade Dow, Nasdaq, S&P500 or crude oil, all these indices they work on short-term trend analysis because being the indices they don't move abnormal to the last trend levels. They move to some fixed levels, and this trend will be valid for 15 days, where the levels will be perfectly be matching to that level, and trends are going to be so excellent trend levels where you can confidently take a trade and leave it to the stock or the index to reach to next level. Such is going to be the trend analysis here in the short-term trend. Actually, the one first fundamental is for short-term trend analysis. It works on locating the trend reversal price for the short term, and another is assessing the trends for the stocks or index, whatever it is. Here there are four steps, like every time I have been trying to explain to you. First step is locating the trend reversal price, where the trend above that price is uptrend, below that price is downtrend. To locate that price so precisely is not that easy, because for that only we will be using so many charts, so many indicators, so many trend lines, only to locate below which price when the fall is there, above which price when the shoot is going to be. That is going to be the main, actually the important issue for any trader or any investor or whatever it is. That is the main issue which everybody is worried about and everybody cares about, because that gives us actually the profit or loss, whatever it is. Here we are locating the price. First is locating the trend reversal price. After that finding the level trend reversal price. Here we call this trend reversal price of short term as TCR, trend change rate, or TCR. Above this TCR, some levels will be found. For index normally we give 9 levels, and for below 9 levels. For short term we give 12 levels on the upside, 12 levels on the downside, short term also, because stocks move more fast than index, because index is a combination of few stocks. So stocks moves much forward. So that's how we normally give. Second step is forming the levels. Third step is assessing the trend between the levels. So how it is going to be. Then fourth is concluding the strength of the stock or index or whatever it is. Here we are giving, just explained to you, the Nifty and BANKNIFTY TCRs and other things. Nifty TCR is 17,796 is the TCR for the present trading. BANKNIFTY is 38,232. So it broke Nifty 17,796 around 5-6 days back, and after that fall took place. When the trend is decided, TCR is decided as 17,796, then the levels are formed immediately. The levels upside are 17,982, 18,168 is TI2, 18,507 is TI3, 18,650 is TI4, 19,064 is TI5, 19,190 is TI6. This is on the upside levels. We are taking 6 levels here, being index. Then here low side 17,610, 17,424 is T low 2, 17,098 is T low 3, 16,966 is T low 4, 16,590 is T low 5, 16,480 is T low 6. These are the downside levels. Upside levels are formed, downside levels are formed. Now what is the next? Next is assessment of the trend assessment. How trend assessment will take place, will happen. Then the fundamentals here are if QTI, if it is for example, if any stock LTP of current move, last traded price is between TCR and between T high 2, it is an uptrend. If LTP is between T high 2 and T high 4, it is in strong. If LTP is above T high 4 and below T high 6, it is very strong. If LTP is above T high 6 and below T high 9, it is strongest. And if it is above T high 9 means very strong, very strong. There is no, it will not fall at all. That is on the upside. Similarly, on the downside, if a stock is below TCR and above T low 2, it is downtrend. Below T low 2 and above T low 4, that is weak. Below T low 4 and above T low 6 is very weak. Below T low 6 and above T low 9 is weakest. This is actually the system of this one. Here, one important thing which you have to find out is when a stock crosses TCR, it will certainly reach T high 1, and possibly T high 2 also. It will struggle for some time. But once when it crosses T high 2, it will certainly go to T high 4. There is no doubt about it. If it crosses T high 4, then it will become very strong and it will straight away go to T high 6. If it crosses T high 6, and it will directly go to T high 9, but go in a very fast way and in a very short span of time. This is how this functions actually. Similarly, on the downside also. Here now coming to our issue here, we are talking about Nifty. Nifty, it broke 17,000. TCR is, we have discussed already, TCR is 17,796. It broke 17,796 a week back, and it first reached 17,610. So most of the people and many traders thought that 17,600 may not break, because it has been moving only between that range, and that too the fall is from 18,600. So some percentage retracement, something, people keep on talking about that, because that's all oldest system of assessing the stocks, which 90% not become true. Then it broke 17,610 also in just next one day, and its right come and settled at T low 2. As we all know, as I have been explaining you, when once it breaks TCR, it is supposed to come to 17,424. So it came to 17,424. Now after 17,424, it bounced back to 17,610. Then again come back to 17,424 and closed the day before yesterday at 17,530. That is between these two, T low 1 and T low 2, it closed. And yesterday morning, it broke. See, when once we know that it is not moving towards TCR and it is struggling a bit below T low 1, it is indicating that it is a downtrend. And once it breaks T low 2, 17,424, it is very clear for us that it is supposed to go to T low 4. T low 3 main first. That is T low 3 is 17,098. And T low 4 is 16,966. And it almost went to that 16,985 is yesterday's level. And there's no doubt tomorrow and after tomorrow it will go. And what happens if it breaks 16,966? Then it will directly go to 16,480. It is as simple as that. There is nothing to think so serious about what will happen. If it breaks 16,966, it will directly go to 16,590. Then after that, it will go to 16,480. But will it bounce back at any stage, or at some stage? Is there any possibility of bounce? We may have to look into that. Normally, as I told you, whenever a trend changes, 17,424 is weak, downtrend. 19,966 is weak. Suppose if it touches Monday, 16,966, there is a possibility of the stock getting bounced up to 17,098 or something. It may bounce, because normally whenever that level touches, a bounce will happen. It may bounce up to 17,098. But if it crosses that, then possibility of shooting up to 17,424. But if it doesn't cross, and if it reaches somewhere around 17,100 or something, or 17,150, then going in the reverse direction to 17,098 below, then you can take it for granted that it will break 17,966. And if once it breaks 966, straight away it will lead you to 16,590 and then 16,480. This is the simplest way of trading in the total stock market history. It is simplest way of trading. The trading will be so simple. Every individual can assess based on these levels whether the stock trend is up or down, whether the stock is strong or weak, whether the stock is very strong or very weak, whether the stock is strongest or weakest, whether the stock is excellent or worst. You can simply decide based on these levels. It is such a simple trading strategy where you can directly trade everything on your own. Imagine for a minute, if any trader knows these trend levels, when it closed on day 4 yesterday, that is on Thursday, at 17,530 or something it closed, 17,530 or something. Next day morning, when it opens below 17,424, will any trader try to go for a straddle or strangle or anything? Will anyone trade? No one will trade for a strategy. They have to either go for straight selling the future of Nifty future at 17,424. When it touches, put a stop loss of around 40-50 rupees, 2 lots, short it and allow it to move. That is one system of trading they prefer. Or they will go for straight away 17,500 or 17,000 put, 17,600 put. Directly they will take and leave it and allow it to fall. Because persons who don't know the trends, who don't have the idea of trend analysis, who don't know anything, those people only go for shorts, short straddle, short triangle, iron corridor, this all sorts of stupid strategies they go. Otherwise, a person who is knowing the trend will never look into, especially the confusing strategies. Option strategies are 30 years old, outdated, waste strategies, which normally a man with the idea of the direction of market will never use. They either go for future selling by putting stop loss, or they go for options directly buying or call selling, or one directional selling, one directional trading they do and make money and live peacefully and coolly. Not continuously taking positions and adjusting weeks after weeks and struggling for making 4,000-5,000 rupees a week by spending a few lakhs of amount on as deposit to the broker. Normally no trader prefers to do that, but they are compelled to do because they don't know the direction of the market. They don't have idea of where the market is going to be. They don't know what is the next level of market, how it is going to trouble them, how it is going to be helpful to them. They don't know. So they struggle a lot to come out of all these things because they don't know actually trend analysis or trend levels, whatever it is. That's how they land into such type of problems. So here you please see this video 3 to 4 times and especially understand the levels especially, and between what level and what level. Here I have given you Nifty 50 levels. If you ask for Bank Nifty levels, you can give. Otherwise, we will post one more video tomorrow for Bank Nifty. You just note down the levels. You just check where the LTP is. If the LTP is below between some levels, you assess it as weak or strong and write a pen and write down. So Nifty is weak. Nifty is downtrend. Nifty is weakest. Then if it breaks, what is going to be next? Worst. You conclude your own decisions and take a positional trade. Be happy. and don't get into waste short triangle, short straddle, stupid option strategies. They are all immature, outdated strategies, and persons who don't, who always be in confusion. They prefer to keep themselves in tension. They don't like peaceful trading. Only such people will go for these stupid strategies. Otherwise, no one will prefer a strategies of a short straddle, adjustments, all dirty things. Everyone prefers a simple placing of order, making some money, taking out the profit and go, or booking the loss through stop loss and go. Everyone prefers that, but they can't help it because they don't know the direction of the market. Here we are helping you to learn how to use the levels, how to use short-term trend, how to use it for Nifty levels and Bank Nifty levels, and trade and be happy for the day, and close all your positions by end of the day and go home. Thank you. If you are happy with our trend analysis, please subscribe to our channel and share it to your people who are suffering, and like it if you are really happy. Thank you.